Ladies and gentlemen of the crypto space, we're having a Monday, April 21st at 11:45 a.m. A little bit late today, but we got to get the party started. Even it's better late than never. I guess that's the appropriate phrase. All right, so this is some serious shit. This is like the world. The world's changing. You're witnessing one of the greatest restructurings of global economics that we've had in the last 25 years, because as you can see here in the chart, I'm trying to get a scale price range. So that was about a 667% increase, trough to peak 227. So this is the largest repricing of gold since 2000. I guess maybe if you go back to the 60s, let's see what that delta is. Trough, peak. Wow, how about that? What is that? 1976, post $71. Isn't it strange how so many charts really start in 1971? Oh man. I mean, from like significant volatility wise, because obviously this goes back a fair bit more time. We have data back to 1833 on gold. But you only get this big volatility starting in 68, leading into bump, 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 70, 71. Nixon shock closing the gold window. And that was a 773% rise. And obviously, we could count this one, two, three. It's like a decade, give or take. So we are sitting on the largest repricing of gold since 2000. Yay! Welcome to some serious shit's going down, ladies and gentlemen, to say the least. Everyone's jaw should be on the floor. This is part of the story is um, overall portfolio construction should have gold in it. It's a heck of a dollar thing to dollar cost average, along with things like Bitcoin and things like not stable coins, but investments. And that's the composition of a healthy portfolio. Cash, stable coins, Bitcoin, gold, silver, what have you. Things that you could sell relatively quickly that have intrinsic monetary properties. And then investments that produce cash flow, because none of that shit that you just put in your cash part of the portfolio produces any cash flow. So everything still remains the same with regard to overall structure, even though the world is changing. That's why they always talk in terms of a barbell portfolio. It used to be stocks and bonds, and now it's really like stocks and gold. And that would have done much better than a 60-40 traditional portfolio of stocks and bonds. Stocks and gold would have significantly outperformed over the last several years. Pretty wild what's going on with the gold price. Talk about signal through the noise. And Bitcoin is mirroring it very nicely, 2.91% on gold, 3.45% on the Bitcoin move, 24-hour candle. That is constructive. 13% move on convex. Markets moving. Do we, you know, I always try and think about how to talk about what the hell is going on. And it's like, what are people thinking? Is every topic of conversation supposed to be a doubt of an investment thesis? Like, this was a good investment. This is no longer a good investment. I should have invested in this. I shouldn't have invested in that. That's not a healthy topic of conversation. But maybe that is what other personalities or other folks end up discussing from a trading perspective. Oh, I'm going to exit this. I'm going to enter that. And they're constantly flip flopping on what is something good to look at. Consistency is a hard thing, especially consistency over a long period of time. It is an even harder thing. So that is something that I take great pride in, to have this great consistency over long periods of time. Let theses play out, conviction. It's not conviction that's blind faith. It's conviction that is justified after significant due diligence and sophisticated understanding of what's actually occurring. So it's warranted. It's not just trivial or shallow. And that's very important to have, not just for the sake of your investments, the sake of your sanity, the sake of your sanity. On a day like today, I like watching the gold price. That gives me great comfort, gives me some sanity. That is insane, ladies and gentlemen. Total three up 1.23%. That's actually nice to see. I would like to see this bottom. Has a very similar characteristic to many other charts. Big pullback since early January of this year, but we see this bottoming pattern where we have a left shoulder, right shoulder, and then the neckline, so to speak. So we're many percentages off what was this Pico bottom 659 up at 774. It's a significant move. We don't really get to see this break out, and it never did break out from. Here, watch. Zoom out to the monthly. Never did break out from all-time high. Total three for folks that don't know. This is your total crypto capitalization, other than Bitcoin and Ethereum. No, we never broke all-time high from 2021. Oh my goodness. That's going to be, if this plays out the way it looks like it's going to play out from a monthly candle standpoint, that is a heck of a in hammer. It's not an inverted hammer, that's a hammer. And that is a 10, there's a 10 SMA mean regression from a monthly standpoint. And that would be very much consistent with the cup and handle if this dares to play out. If that even remotely dares to play out, that's a heck of a cup and handle right there. I don't like patterns like that. They don't bring me great comfort. Like, ooh, it's a cup and handle. It's a head and shoulders. It's an inverted head and shoulders. Like, what do you fucking do? What's more comforting for me is this level right here, and we are a long ways from that level. And moving averages. So I do find it comforting to see a 10 SMA mean regression. Mean regressions are healthy, but that's not the fun part of the move. This is a regression down, back two. So it's a level of support. Support tells you structure, tells you, where people are actually willing to deploy capital. It's constructive in the overall state of things and where things are. That's not the exciting part of the market. But it's imperative. You need to find your support and where people start to come into the market. It is bottom in many regards, and a healthy structure, a healthy chart is higher lows over time. And we clearly see that. That's a nice trend there. 2020, that's a heck of a bottoming pattern right there. If you spread it out and you see that 2022 to 2000, almost 2024, June to October 23. And then you get your series of higher lows, boom, boom. And now here's your third. One, two. That's cool. So maybe we get a triangle of compression up next, something like this. You know, something like that. I don't know. I I dare not speculate on what the future trend will be or what the price action will be. It's not even price action. This is an index of sorts. Um, that's it. We're going to keep this stream simple today on a day that gold is completely shattering all expectations, on a day that crypto is underperforming gold in many regards. but it's still the most exciting place to be. It's the place where we hold our hat, we apply our conviction, and we know it will outperform because the destination of the monetary order is to expand global currency supply under the right conditions. And the right conditions are not there yet, with move remaining at 114. 10-year yield was up over 1% today, earlier today, coming back down a little bit, 4.37. I mean, we're not getting a bid in duration. There's a tremendous amount of selling. There's a massive restructuring of global capital that's going on. I mean, just look at the DXY down at 98. That is a 100 SMA mean regression thus far on the monthly. That is wild to see. We just don't have the other components that are required, um, especially move rolling over. Because if you have not, if the collateral has not significantly appreciated, fine. That means you don't have more principal to borrow against. If the volatility is low, people are still going to be borrowing. Problem is, with such high volatility, it basically shuts down credit using global collateral, or at least U.S. long duration debt as collateral. So that's why the DXY and the move um, aren't enough. You really need that appreciation of 10-year to 30-year debt instruments combined with move rolling over below, let's say, an 80. At least the DXY is heading in a good direction, but we need more. Eunice in the house. Good day, Cap. Your soothing sexy makes my tiny brain calm. I hope it's good content. It's a little repetitive without the market actually doing something that we could talk about. Like, I don't know, optimism making a statement, Arbitrum coming back from liquidity drain. Then you could have a constructive conversation about what the hell is going on in the crypto markets that are significant structurally. So we don't have that. Um, it's still doldrums in many regards and waiting for capital to figure out what the hell it's going to do. It's just wild to really recognize the direct, very clear statements of U.S. administration, frankly, global administration at this point, what they want to do with stablecoins and what Europe's doing with all their regulatory positions. But these types of processes where the entire traditional financial system is restructuring and also recognizing potentially new financial infrastructure and how all of this plays together, it takes a long period of time to play out. And that's what we're living through in real time. And if you need a piece of technical data to say you're living through this shit in real time, it's this gold chart. Tells you everything you need to know. Talk about in real time. DA advisor in the house. How are you, my friend? Always a pleasure. Adam, hi Noah. I hope you are well. You once said that you'd only consider exposure to a meme coin if you could own 1% of the supply. Under what circumstances would you entertain that type of position? At this point in time in my career and life, 0% of the time. I have no interest in anything that is not an investment or cash. I am absolutely required to maintain composition of the portfolio accordingly. Cash investments. Meme coins are useless. They will die and go to zero unless they're part of the few. Doge, WIF, so on and so forth, Bonk. Some of the other meme coins do have staying power, and they'll be studied for a long time, like Doge. There's periods of time where Doge has been a better investment than Bitcoin. And that's just long-term accumulation, and that's factoring in its inflation rate and supplies, expansion, contraction, what have you. Um, but that's just not something that I'm interested in participating in at all, and that is okay. You all can make your own choices. You're all grown-ass adults. If you want to have meme coins. Shouldn't be part of investments. That doesn't make any sense. So how do you structure a portfolio with these types of categories? We certainly know you should have cash in the portfolio, cash, something that is either a stable coin or something that is, you know, cash equivalent that you could easily liquidate. Great, cash part of the portfolio. Investments produce cash flow. That is something that I hold dear and assert very strongly. So, what are meme coins? Speculations is not a derivative. It's a gambling type of product. It's like when you go to a casino, do you say you're investing in blackjack and poker? If anything, meme coins have characteristics of gambling speculation. They have characteristics of cash. Okay, great. That's cool. At least define what these things are. So maybe they're a subcomponent of cash. They're a subcomponent of cash that doesn't have characteristics of an investment. There's no cash flow. So it's a cash like speculation. So to each their own. That's how I would define engaging with that type of instrument slash product. And for everyone's reference, I have 0% exposure to anything like that, even if it was to have 1% of the supply, because you can make your own token and own 50% of the supply. What does it matter? It's all just smoke and mirrors at the end of the day. Sir Joe, President, accounted for. Sir, yes, sir. Team Connell, hey, Cap. Been locked in since copy trade your FXS purchase. That was years ago. I've learned a bunch from you. Went through the school of hard knocks. Fumbling now after so much pain. Serenity. That isn't that the best thing? Just I know what I own. I'm comfortable with what I own. The market's going to tell me the value of what I own. You have no control. Nobody has any control over the total net worth of their portfolio. The market decides that. So that is literally exactly what Serenity talks about. Take care of the things that you're in control over. If you can't control it, don't worry about it. So the valuation of your portfolio is outside your control. What you choose to own, under what conditions, that's in your control. And that's why we have investment theses. That's why we have the investment bucket of the portfolio, the cash bucket of the portfolio. Under what conditions do you purchase something? What are the criteria? What are the attributes of something that is purchased? It should be a big deal for an asset to be part of your investment portfolio. Should it be simple? It shouldn't be a whim. It's something significant, something meaningful. And it should be something meaningful to each of us after significant due diligence. That was a long time ago, Frax. I still have my exposure. And I look forward to seeing what Frax will become because they have been doing exactly what I expected them to do. Continue to ship nonstop. Those are the good old days. What was that, 21, give or take? Oh, does time fly? Eunice, if you don't mind me asking, Cap, you think Bitcoin bottoming, seeing the current market conditions, it doesn't really matter, bottom, top. I guess that's another story. Rim shot. Bottom, why? Well, why is what is it significant? Why would it be significant? If it goes lower to where? The 60s? In the middle of 2024 last year, we had the Bitcoin ETF. This was your ETF region, give or take. And I remember seeing the ETF launch at 47, give or take. Yeah, it launched back here. Wasn't it like February or something like that? I remember 47, and then I remember it crashing to 40 on ETF launch. That's all I remember. And we're up at 88. So what's bottom? I mean, literally, the 50 SMA and the monthly is at ETF launch level. That's actually really wild. That's how long it's been. And that's how deviated we are from an average price. That would be a structural breach. I would like to see it stay above this compression of levels right here. So let's say like 70 to 73, 74. That would be comforting. Anything lower or significantly lower than um, its current regression to the 10 SMA and the monthly. This is a retest of previous all-time high. You notice that, right? And so here's your limit, and this is a retest of that. So this is our first retest. And it reminds me of actually NASDAQ. I mean, all NASDAQ did thus far, even though it's down 586 points today, is a retest of previous all-time high. I the system, there's the structure of the system is kind of screaming to us like it's about to change. Things are going to get weird. Gold's at $3,400. Holy shit! They're going to be they're forcing themselves to retain or wait as long as possible to monetize. I don't know. This is exactly what everyone's been talking about for all these years, and exactly what Ralph Powell talks about. What else are they going to do? So otherwise, you break this trend. I mean, literally, you break this trend. That's a long way to go. There's a mean regression down to 11,000. What, 100 SMA in the monthly? We've had mean regressions to the 50 SMA. 2022 was mean regressions to the 50. Never quite got to the 100. We haven't had a 100, a NASDAQ 100 monthly since '08. Absolutely wild how far departed we are from long-term moving averages. System would be really ugly if there were mean regressions at this point. Anyhow, so I don't know. No one will ever know when bottom is, but the market's going to tell us. That's the best part. Eunice. Same here. It's lock forever. Lock forever. We own, we purchased, and we've probably bought many things since then. We own many new things since then that are purchased, paid in full. It's like buying a car, going to the Best Buy and buying a cell phone, buying a house, what have you. These things have paid in full, and they happen to be cash flow productive, which is a side benefit. Rule number three, most important attribute of any investment. So we'll have a nice story to tell in a couple of years, my friend. Been a pleasure. Eunice, so I can enter a trade. Oh, from a Bitcoin perspective. I don't know. I trading, schmading, Bitcoin 3.4% of the day. What, you do a 10x leverage and you made 30% of the day? Okay. I could see that as reason to want to do trading. Um, I can't help you. I don't know how the best to help you with that kind of thought process. Uh, I never really understood folks that gave commentary on, I think it's bottom, I think it's top. It's like trading, sportscasting. Never really understood that. Like, why? Because then things come back on you. I think it's bottom, and then someone else is like, I agree it's bottom, and they buy, and it's not bottom, and then you're like, shit. So I don't know, I don't understand that. So that's why, in good part, I honed in on my methodology, because that's something I could be consistent about. Rule number one, own more assets. Rule number two, know when to stop buying assets. Rule number three, fuck you, pay me. You know the deal. That's the most important attribute of a good investment. We're going to keep it short today. A lot of things going on. I got stuff to do at the office, and market looks good. But I appreciate everyone joining me on this Monday post post holiday weekend, and I'm sure the rest of the week will be interesting. I'll try and get as much content out to you as I can. Monday, April 21st at 12:10 p.m. Thank you all for joining me. 234 people made it to the end of the stream, and you're all now that much more rational because of it. Until later this week, catch you then. Peace.